Do you have a loan with a financial institution at this time? Well, in this video, we're going to be talking about loan waivers and loan moratoriums. What's the difference between the two? Is there even a difference? Let's get started. Hello everyone, my name is Denise Walker and I'm with the JTA Corp Credit Union. Today, we're going to be talking about your finances and how you can gain and stay in control of them. Welcome to Money Talks. Be sure to click the subscribe button below and the bell so that you never miss a notification and you'll be the first to know whenever we upload a new video. So during this pandemic, I know that there are some persons who may be experiencing difficulties repaying their loans. Their salaries may have been disrupted because of what's happening all around us. Okay, let's start with a loan moratorium. What exactly is that? A loan moratorium is a special arrangement where the lending institution agrees to allow the borrower to forego loan repayments for a specified period of time, usually 3 months or so. So during the specified period, the borrower is not expected to make any loan repayments at that time. Note, however, that a loan moratorium is not a loan holiday. A loan holiday is something very different. With a loan holiday, the borrower is not expected to make any repayments whatsoever during the specified period. The loan is more or less frozen at that time. With a loan moratorium, however, while it is true that the borrower is not expected to make repayments during the specified time period of the moratorium, interest will still be calculated on the loan and the life of the loan will be extended by whatever period was specified for the moratorium. According to entrepreneur.com, borrowers who are not experiencing difficulties repaying their loans should not opt for a moratorium. So even if they are offered a moratorium, it's best to repay your loan once you're able to do so. Why? Because a loan moratorium extends the life of the loan, and because the interest is still being calculated on the loan ends up being more costly. So if you are not in a situation where you have to take a loan moratorium, you're being encouraged not to take such. Now let's talk about a loan waiver. A loan waiver is the complete forgiveness of a loan. So it's the lending institution saying to the borrower that we are forgiving you this debt. You do not owe us anything whatsoever. And you are under no obligation to pay us back this loan. Loan waivers are applied under very special circumstances, and they're not something that is extended to a borrower just because they're having financial difficulties. It's better to work out your financial situation with your lending institution than to opt for a waiver. So a loan waiver is granted under special circumstances. So say, for example, a loan was granted to a farmer, and the farmer's intention is to use the loan in a very productive way to help to grow the economy. If for whatever reason the individual who has borrowed the loan finds it difficult to make repayments, then the lending institution will extend a waiver on the loan. So that's one example of how a loan waiver might be applied if the loan is going to be used for some economic benefits. A lot of financial organizations at this time are extending moratoriums to persons because of the COVID pandemic. So in order not to put any added pressure on individuals at this time, financial institutions are opting to extend moratoriums to persons who have loans with them. So it's a way to ease the financial burdens that persons might be facing at this time. A moratorium will, for whatever period it's being extended, put some cash back into people's pockets. So it's a welcome gesture, but bear in mind that in the long run, it will end up costing more. Just to recap, what's the difference between a loan waiver and a loan moratorium? A loan waiver is a complete forgiveness of the loan. It's the lending institution saying to the borrower, you are under no obligation to repay me anything in connection with this loan. A loan moratorium, on the other hand, is not a forgiveness and it's not a holiday. It's really sort of a rest where the borrower is not expected to make any payment on the loan for a specified period. Interest is still being calculated on the loan, and the life of the loan is extended by the period that the moratorium would extend for or is granted for. Okay, so that's it for today. Thank you so much for watching. We would love to hear from you. Please leave us a comment below and let us know what issues you're facing and how you found the video. Please remember to like, subscribe, share this video with your friends and colleagues, and look out for more from us from the JTA Corp Credit Union.